The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks Investment Research, and I've got two more stocks for your aggressive growth radar screen. So let's just get right to it, shall we? And we're jumping right into it. And our first stock that we're taking a look at is carparts.com, and it's PRTS as the ticker. It's a Zacks rank number one. Put a little square around that, and that means it's a strong buy. And it's with most of these aggressive growth stocks, we're taking a look at stocks that have a growth style score of A, and you can see this one does. It says a D for value, so I would like to call that the divergence, the growth divergence that I love to see. So basically that means that we have a strong growth score, a weak value score, and growth investors and value investors are inherently looking for different things. So when I see that divergence, when I see that big thing, that big difference in the style scores, I know I'm on the right path right away. So carparts.com is our thing. So obviously this is car parts over the internet, and this is kind of the a little play on a potential recession. Should a recession happen, car parts are going to be needed by people that is still driving to work. So they're going to want to make sure that they have parts for their car to make sure that they can continue to drive. All right, let's go to the numbers that we always look at. And first up, we're going to look at the earnings history here, and we've got a massive beat right there, a miss, a small beat there, and then another good-sized beat right there. So you're seeing pretty good bookend beats on that. So I like the way that has set up. Now we're going to scoot up the page just a little bit and take a look at the estimates. And I think this is where your difference is here. We went from a loss of 3 cents to a gain of 3 cents here. This one's moving the wrong way. We went from a loss of 6 cents to a loss of 8 cents. That's no good. But here we see a loss of 25 cents shrinking to a loss of 13 cents. That's good. And next year, a loss of 18 cents moving to a loss of 10 cents. That is very good. That's what we want to see. Let's cheat just a little bit as we're looking forward here. But we can see growth, is pretty stable here at 12% this year and next year. At least that's what the analysts are saying. So now as we flip over to the valuation, oh boy, isn't this the worst? We have an NA for here. That's our multiple that we would normally look at. But we can see the top line growth was pretty strong most recent quarter at 14%. Price to book a little bit rich here, 4.3 times. Price to sales coming in just under 1. We like to see that at 1 or above. That means the market's going to give us credit for every dollar that we see in sales. But we can see margins, that was a bad move here, but then a good move. So a little bit all over the place here on margins. As soon as they can get operating margins to flip from the negative to the positive, we can really have something here. But obviously we have a very depressed stock price. As we can see, it's in the single digits, and I think that's a little bit of a theme for today. But, we saw the stock skyrocket here from $2. Let's see if I can't make that happen. From $2 all the way up to 20. Woo! What a move. God love you if you were in it for that. But then coming all the way back down to 6, and then a nice little back up here. So this is obviously a name that is kind of a specialty sort of play here. Carparts.com at $8. So it's an under 10. It's something that I'll be looking at for that portfolio as well. But this is definitely a play on, is there going to be a recession? If there is, this is something that's probably going to hold its own because people will probably try to fix their own cars as opposed to getting rid of them. All right, let's jump over to our next play, and this one is Technoglass. TGLS is the ticker. It's a Zacks rank number 1 strong buy. It's got an A for growth and a B for value. $18, boy, I thought this was going to be a little bit lower price, but that's okay. 18 is still probably a decent price. Let's jump over and take a look at our usual suspects of of numbers that we always look at. Got stuck on the word of there. Nice, good beat here, 36%, 32%, 31%. That's a nice bit of consistency right there. I don't mind saying myself. And it slacked off just a little, but boy, we can see numbers 41 to 45 to 45 to 50, 55 to 53. Boy, I like the way that that's rolling up higher. That looks good. So we've got 4 good solid beats. They're increasing in dollar and in absolute terms, and looking good. All right, so estimates 53 to 57. I like seeing that. 56 to 59. I like seeing that. 212 this year to 224. I like seeing that. Next year, 241 to 255. All those arrows going in the right direction. That is what we love to see. We'll scoot up here and we'll just take a quick look here. We see the sales 21% this year and 12% next year, but we'll see how that turns out. It's still a little bit earlier in the year. So 8 times forward earnings. That's a nice low multiple for a stock that posted 21% top line growth in the most recent quarter. Price to book hanging out at 3 times, and price to sales 1.5 times. So let's take a look at our margins. 14 to 16 to 17%. I love it. I love seeing it like that, straight up, up and away. When margins improve and we've got sales growth, earnings are going to keep on moving up, and that's going to help for multiple expansion. So let's take a look at the chart here. This name back in 2020, that was the COVID crisis there. But boy, oh boy, just kind of a up and now a little bit of a downturn. I think I scribbled over the line there, but we can kind of make it out. It's going straight up and then coming back in a little bit. So what's the idea here? What can we learn from this? We see estimates just keep on looking good. Just whoa, look at these estimates. They're going up there. Boy, I really made that thick. But as long as estimates keep moving up, even if the stock is moving down for over the course of a few months, this is going to give investors all the reasons in the world once this downturn is over. And let's face it, downturns don't last forever. They end up stopping. But when this is over, this will be one of those stocks that will see a very quick recovery as the price will head back to where the earnings are. So even if this one has a little bit more downside in it, if there is a recession, if there is a bigger pullback, I would imagine this would be one of the names that people would be very willing to run right back into it. Okay, so that's Technoglass, TGLS, and the other stock was carparts.com, PRTS. Well, that was a lot of fun. Be sure to join us next time when we take a look at 2 more stocks for your aggressive growth radar screen. And in the interim, why don't you go to Zacks.com/promo to check out all of our recent promotions.